Hey guys, welcome to my channel. It's a pleasure that you're here today. This is a channel on finance, economics, and stocks. And today's video is going to be about this company right here, which is Apple. I assume you know the logo. So we will analyze the company based on its business model. We will do a DCF calculation to figure out its fair value. And we will do a technical analysis to figure out if you can actually get the stock at the price that we think this is the fair value, or at least I think the fair value is. So without further ado, let's get started, guys. I'm really hyped. Let's go! Okay, so to start things off, we have to analyze where Apple makes its money from, obviously. So the most important thing of a company, making money. And Apple does it by selling iPhones, which makes up more than 52% of all of its sales. And as you can see, the iPhone sales have really been skyrocketing since Corona. And I think that's due to the fact that many people started working remote. Yeah, same is probably true for iPad sales and Mac sales because people wanted to work from home, stay connected, obviously. And yeah, that has really driven sales and these kind of products. And this is also resembled in the total net sales of Apple. As you can see, the last 2 years have been really great for them. I mean, growing net sales nearly $90 billion is amazing. And then another 30 billion in the next year. It's just amazing. So I think they profited from Corona, from the pandemic. Then what has been a huge factor in the last few years have been their services sales, which has really picked up pace. And honestly, from a business standpoint, I really like what they're doing. They're creating this huge universe of products that all sort of interlink. As, for example, if you have an Apple Watch, then you probably want to use an iPhone to look at your data or analyze the data better. Or if you have an iPhone, you want to use AirPods, which are pretty good. So I think it's all interlinked, and they try to even enforce these links in the future even more, which is, I think, Apple's biggest moat. They created the spectrum that you can't really get out of if you started using any of their products. But regarding the services, there's one small thing that might be a headwind in the future, namely that companies like Spotify or Meta, so Facebook basically, they have complained that Apple is misusing their market position. For example, they take 30% of all of the sales companies make from their App Store and everything that is related to Apple software, so iOS, which is a huge chunk. So let's see what happens there. And for example, Meta they recently released their verification method, which you can subscribe to. And it's actually cheaper to buy the subscription outside of Apple's universe. So if you buy it on iOS, it's $14.99. And if it's somewhere else, it's only $11.99. So I think people might tend to choose the cheaper one. And if other companies start using this technique, this might produce a small headwind for Apple's services segment. To summarize Apple's business model, I do think they have a really good business model. They created this world that is hard to get out of. You get stuck in it once you're in it. And I think that's also the one thing that Warren Buffett, for example, looked out for in his investment decision in Apple, that they created a moat which is hard to conquer. You can't really create these interlinktions of different products and services that easy, which is why he probably made that decision to invest in Apple. But now let's get into my DCF valuation. And to start things off, we're going to look at the current price of Apple, which is $145.44. And let's keep that in mind to compare that number to my valuation. Now, welcome to my fantastic DCF valuation. I will go through some of the assumptions I made, and then we will end up at the valuation at the end. So let's get started. I made assumptions for the next 10 years. As you can see right here, I splitted them up into different time frames. For the revenue part, I believe that Apple will experience a slowdown in revenue growth because I don't think that people will buy a lot more of Apple products. They did buy them in 2021 and 2022 during the pandemic. But I think the run is over at the moment. They still might rebuy things to keep themselves updated, but I don't think that they would buy another iPad or another iMac, whatever. And then we have the cost of revenue. I think they will stay close to the revenue because we still have inflation, so I think the products will get more expensive. Apple will also experience inflation, but they will still widen their operating margin, in my belief, because they do have a good cost management and they have a lot of strength when it comes to negotiating with their suppliers. Then we have SG&A and R&D. I put these two together because, yeah, they have human resources, which is a huge thing for them, and they have their intellectual property. I think they should spend more and more money, or keep the money that they spend in these two segments the same or pretty high, because it should be their highest priority to stay ahead of their competition. Then another thing I want to point out is the debt situation. Apple has a lot of debt on their balance sheet, so they might want to reduce it due to the rising interest rates. I believe that in the next few years, especially the short term, they will reduce it sharply, but I do believe that in 5 years they will take on debt again to finance their operations. And then my next assumption is the eternal growth rate, which I assume to be 2%. And I expect Apple to make returns of 15% per year. That's why my cost of capital is 15% right here. Of course, these are my individual assumptions. You can have different assumptions. This is just my personal opinion. The risk-free rate, I used this one to calculate the terminal value of Apple, and I used the 20-year US Treasury for it. Once I predicted all of the incomes, all of the expenditures, we arrive at the present value of cash flows here at the bottom. And if we add up these present values, we reach the conclusion that Apple has a value of about 2.2 trillion US dollars compared to 2.3 trillion US dollars market capitalization. So it's pretty close. Apple is slightly overvalued in my opinion, but it's not too far. So I think it's a realistic number that we can reach also in the next few days and weeks. Let's do some technical analysis to figure out if we can get an edge on future price movements. This is a daily chart of Apple going back 1 year. It might seem like a lot, but it's pretty simple. The blue line right here is the 200-day moving average. This colored area is a Fibonacci retracement I applied, and which actually worked pretty good in my opinion. So if you look at these levels where Apple rebounded or got stuck at, I think it's pretty accurate. So my assumption is that, especially now that Apple has breached the 200-day moving average, that they might even continue going further down to 140, which would be my first buying area. But if they even breach this area, they might drop even further to 125, and that would be a really interesting area for me to buy, because I think that would be a really fair price. And I do think that this is a realistic area because we still have inflation soaring and we have a recession that is looming on the horizon. So we have two factors that have the potential to pull down the market in the next few months. Even though many believe that the recession won't take place, I do believe that it will come. I don't know how hard it's gonna be, but I think we will see slowdown of the economy in the next few months, especially in the second half of 2023. And therefore I think getting Apple at a price of 140 and below is pretty realistic. That was hard work getting through the analysis, but yeah, we've done it. And to summarize up things, I think the business model is really good. So thumbs up for the business model. Actually, 2 thumbs up for the business model. Second of all, I think the stock is fairly priced at $140 at the moment with my current assumptions. There's always sirens going off over here. And third of all, I think we might even get that price in the near future. Even below, if we're lucky. The lowest price that I assume in midterm is 125, which would be so great. But yeah, if it's only 140, that's also pretty good. Again, this whole video is based on my opinion, so you should do your own research if you want to invest into Apple, but I hope this gives you an idea of how to analyze Apple and what comes into play when figuring out what's important and whatnot. I hope this video was still helpful. Thanks for looking at these pixels which depict me and my video, and I hope to see you guys next time.